Listen to me very carefully right now, because what I am about to share with you is not a matter of opinion. It is not speculation. It is not a sales pitch. It is documented, verified, real-world data that the mainstream financial media does not want you sitting down and actually thinking about. Obviously, and if you have been waiting for the right moment to understand why silver may be the single most underowned, most strategically important hard asset that an ordinary person can hold in their hand today, then this is your moment. So do not look away. Do not minimize this. Do not tell yourself you will get back to this later, because later has a way of becoming never, and never has a way of becoming regret. And regret at this stage of the global monetary transition is going to be the most expensive emotion a person can feel. Let us start with where we are right now, because context is everything. Silver is currently trading around $84 per ounce, up over 162% compared to just 1 year ago. Trading economics. Let that number breathe in your mind for just a second. 162% in 12 months. And yet most people watching this still have zero or nearly zero physical silver in their possession. They have a 401k that their broker manages. They have a savings account that earns less than inflation. They have paper promises stacked on top of paper promises, and they think they are protected. They are not protected. They are exposed, and the data tells you exactly why. The global silver market is in a structural supply deficit for the 7th consecutive year. Supply is not keeping up with demand. Mine supply has actually declined by 7% since 2016. Sprott, think about what that means. Mine supply has actually declined by 7% since 2016. Production is going down while demand is exploding upward. And this is not some analyst projecting into a crystal ball. This is what the Silver Institute, the World Silver Survey, and independent firms like Metals Focus and Sprott have all confirmed in their published research. The cumulative deficit from 2021 through 2025 is approximately 820 million ounces. That is equivalent to 10 months of total global mine production, just gone, consumed, used up, not replaced. Substack, where did all that silver go? It went into solar panels. It went into electric vehicles. It went into the AI data centers that are now consuming power at a rate 5,252% higher than they were in the year 2000. It went into 5G infrastructure, into medical devices, into satellites, into the chips inside every smartphone and laptop on the planet. Silver did not disappear. It was used up in ways that cannot be recovered, in applications where it was consumed and is gone forever. And here is where the story gets even more critical, because not all commodities are equal. Gold is money, silver is money, and it is the most electrically conductive element on the periodic table. That is not marketing, that is chemistry, that is physics. You cannot replace it in a solar panel without sacrificing efficiency. You cannot replace it in an EV battery management system without sacrificing safety. You cannot replace it in the circuit boards that run artificial intelligence without sacrificing performance. Silver's electrical conductivity measures at 63.0 million Siemens per meter, exceeding every other element on Earth. And this makes it irreplaceable in high-performance applications where efficiency is paramount, creating what experts describe as price inelastic demand, meaning manufacturers cannot easily substitute alternative materials when prices fluctuate. Shanghai Metals Market price inelastic demand. Write that down. That means that even as the price rises, the industrial users must still buy it. They have no choice. The laws of physics do not negotiate with budget committees. Now, let us talk about what is driving this demand so you understand the full scope of the situation. The Silver Institute released a report in December 2025 confirming that sectors including solar energy, electric vehicles, and data centers will drive industrial silver demand higher through 2030, with EV demand growing at a compound annual rate of 3.4% between 2025 and 2031, and EVs consuming on average 67 to 79% more silver than traditional combustion engine vehicles. The Silver Institute, every single EV rolling off a production line requires between 25 and 50 grams of silver in battery management, power electronics, charging contacts, and wiring. Multiply that by the hundreds of millions of vehicles that governments around the world have mandated must be electric by 2030 and 2035. Where is all that silver going to come from? The mines that exist today cannot produce it fast enough. New mines take 7 to 10 years from discovery to production. The math does not work in favor of cheap silver, and the market is beginning to figure that out. The European Union alone is targeting 700 gigawatts of solar capacity by 2030. The Silver Institute. Each solar panel contains approximately 20 grams of silver. Run those numbers, and then understand that China increased its solar capacity by 45% in a single year, 2024. The largest energy transition in human history is being underwritten with silver, and the world only mines about 813 million ounces per year, and demand is consuming more than that every single year and has been for 5 years straight. The projected 2025 deficit alone is 117.6 million ounces, according to the World Silver Survey, and the cumulative deficit from 2021 through 2025 is expected to reach 796 million ounces, nearly equal to 1 full year of all global silver mine production. Gold, silver, nearly 1 entire year of global production has been consumed beyond what was produced, and above-ground inventories are depleting. This is not a temporary imbalance. This is a structural transformation of the silver market that is happening right now in real time, whether you are paying attention or not. Silver gained 148% in 2025 alone, only 2 monthly losses in the entire year. The metal ended the fourth quarter of 2025 up 53.6%, outperforming gold, platinum, palladium, and Bitcoin. Mining Weekly. This is the white metal. This is the thing that financial advisors told people for years was too volatile, too cheap, too industrial to be a real investment. And it has just done what almost no other asset on the planet has done in a single calendar year. Why? Because the fundamentals were always there. The data was always there. The deficit was building for years before the price reflected it. Markets are slow. Markets are manipulated. Markets can suppress the price of a physical commodity for years through paper contracts and derivative instruments, but eventually reality wins. The gold to silver ratio reached 105 to 1 in April 2025, a level considered by market analysts to be completely unsustainable before collapsing to 50 to 1 as silver surged. Mining Weekly, historically the ratio has averaged between 50 and 60 to 1 since 1971. When that ratio stretched to 105, it was screaming at anyone paying attention that silver was massively undervalued relative to gold. And then the correction happened, violently, quickly, the way corrections from extreme distortions always happen. So now the real question, the one you came here for, how many ounces should you actually be holding in your hands, in your safe, in your possession, in the physical world where no counterparty can fail, no bank can freeze it, no government decree can make it disappear with a keystroke? Let us talk about this seriously, because the answers most people give are rooted in comfort, not in reality. The financial planning industry says 5 to 10% of your portfolio in precious metals, and that is a starting point, but let us think beyond the standard allocation playbook and think about what silver actually represents in a world where silver is more than 162% higher than it was 1 year ago, Fortune, and where BNP Paribas is publicly projecting silver could reach $100 per ounce by the end of 2026. and where Peel Hunt has raised its 2026 silver price forecast to $75 per ounce after revising it upward by 79%. Experts recommend 10 to 15% allocation to silver specifically within a broader 15 to 20% precious metals holding, and many analysts suggest a hybrid approach maintaining 60 to 70% of that position in physical silver stored securely, with 30 to 40% in ETFs for liquidity. Gainesville coins, but here is what nobody tells you inside that framework. The calculation that actually matters is not percentage of portfolio, it is months of living expenses. If the monetary system experiences a reset and central banks printing currency at the rate they have been printing is not a question of if, but when. This becomes a crisis for ordinary savers. You want to know how many months of your life you have protected in real money. The formula used by serious precious metals analysts is straightforward. Take your monthly expenses, divide by the current spot price of silver, and that tells you how many ounces covers 1 month of your life. If your monthly expenses are $3,000 and silver is trading around $82 to $84 per ounce right now, then roughly 36 to 37 ounces covers 1 month. 100 ounces covers about 3 months. 500 ounces covers over a year. And that is the framework, not as a ceiling, but as a floor. A minimum, a baseline of real physical protection that no one can inflate away, hack, or freeze. To be in the top 20% of individual silver holders in the United States, you need approximately 50 ounces. To be in the top 5%, you need approximately 150 ounces. To be in the top 1%, you need approximately 500 ounces. Collector's universe. Read that again slowly. The top 1% of silver stackers in the most powerful economy on earth holds approximately 500 ounces. That is a remarkably low bar. That tells you something profound about how few people are actually protecting themselves. The vast majority of the population, people with retirement accounts, people with mortgages, people who work hard and save diligently, have essentially zero physical silver, zero weight, 0 ounces, 0 real money. They have digits on a screen that represent a claim on currency that is being debased by every new dollar the central bank creates. Every single round of quantitative easing, every deficit spending bill, every trillion added to the national debt is a quiet tax on every dollar sitting in every savings account in the country. Silver does not get debased. You cannot print more silver. The earth contains a finite amount of it, and industrial civilization is consuming it faster than it can be mined. Silver's price has risen by 533.8% since the year 2000. Lens start, and yet it is still underowned, still underappreciated, still sitting in the category of asset that most financial advisors wave off as a fringe holding for doomsday preppers. But look who is actually buying. Institutional capital inflows into silver-backed exchange-traded products surpassed 95 million ounces in just the first half of 2025, already exceeding the full-year total for 2024. Crux investor. The institutions are positioning. The smart money is moving. The people managing billions of dollars of capital are rotating into silver-backed products at a pace that has never been seen before, and the retail public, you and I, are the last to know, as always. This is the pattern. It has repeated throughout every major precious metals bull market in modern history. The institutions position first, the price starts moving, then the public wakes up, then the headlines appear, then the price explodes to levels that make the early buyers look like geniuses and the late buyers scramble to participate. Where are we in that cycle right now? Look at the price. Spot silver in early 2026 had risen almost 30% beyond even the elevated late 2025 levels. Mining weekly, the cycle is not over. The structural deficit is not resolved. The industrial demand is not slowing down. The mines are not suddenly producing more. The math still works in favor of higher prices. But here is the piece that I want you to sit with beyond all the price targets and all the supply-demand dynamics. The reason to own physical silver, real silver, in your hand, in your safe, not an ETF, not a mining stock, not a digital certificate, is not just about price appreciation. It is about the integrity of your savings in a world where the definition of money is changing in real time. When governments around the world are actively exploring central bank digital currencies that can be programmed with expiration dates and spending restrictions, when banks can freeze accounts with a click, when inflation has eroded the real purchasing power of wages and savings for 5 years running, having something physical that has been recognized as real money for 5,000 years of human civilization is not a fringe position. It is the most rational position available to an ordinary person who understands what is actually happening. Silver was money before any government existed. It will be money after governments that currently exist are long gone. No act of Congress, no executive order, no banking system collapse changes what silver fundamentally is. So how many ounces? The answer is more than you currently have. If you have 0, start with 10. If you have 10, get to 50. If you have 50, understand that the top 5% holds 150 and set that as your next target. If you are already at 150, push toward 500 and join the top 1%, which remember is a shockingly achievable bar given how few people are actually doing this. Build your position systematically, buy every month, buy more when price pulls back, buy 1 ounce rounds, 10 ounce bars, 100 ounce bars, whatever fits your budget. Prioritize physical over paper. Prioritize possession over storage in a vault you cannot directly access. Keep a meaningful portion at home in a quality safe. Understand that the premium you pay over spot today is cheap insurance compared to the reality of not being able to buy any at all when the public finally wakes up to what the supply deficit really means for availability. Bank of America has raised its 12-month silver price target to $65 per ounce, and BNP Paribas is projecting silver could reach $100 per ounce by the end of 2026 carbon credits, and both of those targets were set when silver was trading well below where it sits today. The trajectory is clear. The fundamentals are clear. The data is clear. 5 consecutive years of supply deficits, industrial demand at record highs, mine production essentially flat for a decade, institutional money flooding in, a gold to silver ratio that is still historically elevated and has room to compress further in silver's favor. Every single variable in this equation points in the same direction. The only question is whether you will be holding silver when this story fully plays out, or whether you will be watching from the sidelines, wishing you had acted when the data was this obvious and the price was this accessible. The time to prepare is always before you need to. The time to build your position in real money is while the system still allows you to do so easily. The time to hold silver is right now, not when the headlines confirm it, not when your neighbor tells you about it, not when the financial advisor who ignored it for 15 years suddenly starts recommending it. Now, the ounces that matter are the ones already in your possession. So let the question you asked, how many ounces of silver are you holding, be the question that changes how you approach the protection of everything you have worked your entire life to build. The answer should never be 0. The answer should always be more. And the time to act on that answer is today.